Okay, let's talk about one of the biggest debates in crypto right now. Is the crypto market going to reach its ultimate peak this year, or will the bull run go on until 2026 or maybe even 2027? Well, let's break this down a bit. A lot of people in crypto assume that the market lives through cycles of 4 years, and that's because we've seen the crypto market hit its peak every 4 years before going through a crash. 2017, 2021, and if you're good at math, 2025 is next. But there is a major problem with this assumption. Crypto has only been around for so long. Bitcoin started it off in 2009, and altcoins slowly started launching over the next few years. But the first major wave of altcoins popping up didn't take place until 2017. So if you really think about it, most of the crypto market is no more than a decade old. And this concept of a 4-year cycle is mainly based on 3 peaks in the past. With that in mind, the argument of a 4-year crypto cycle starts to sound pretty weak. And that's when you need to zoom out from the crypto space and figure out what was causing these peaks and crashes. For that, we need to turn to some of the macro factors. Crypto bull runs are a sign that money is flowing into crypto assets. And for money to go into the market, there needs to be money available, right? This is when you need to consider global liquidity, or the total money supply. This is tracked by a metric called M2, and if you compare the movement of M2 over time with Bitcoin's price chart, there's a bit of a correlation here. In general, an increase in global liquidity lines up with Bitcoin's price pushing higher. But how do we interpret this? Well, in simple terms, global money supply going up means more money is coming into circulation. This is due to a mix of factors like interest rates going down, quantitative easing, and stimulus injections from the government. A good example of this is what happened during post-COVID-19. With more funds available, investors are more willing to get into risk assets like crypto. So funds start to flow into Bitcoin and other digital assets. And in the opposite scenario, M2 going through a significant drop or cool down period lines up with Bitcoin experiencing a strong downtrend. We can see that every time the price crashed following a peak, M2 also lost its upward momentum during that time. This is usually during a time when interest rates are going up and there's quantitative tightening. And investors are less willing to hold riskier assets like crypto, so they're more likely to withdraw from the markets. So M2 and Bitcoin generally moving together over time makes sense. But what about these specific moments when Bitcoin took off and did a monstrous climb to the peak? The same peaks that happened to be 4 years apart. What was so special about these moments that led to a massive climb? Well, I can tell you that there are some hidden signals if you look closely at this chart and some other critical data from the last cycle. And we're gonna dive deeper into this in today's video. At the end of the day, we're all trying to figure out what's gonna happen next with the crypto market. Are we about to go up and hit a new peak, or are we heading into the next crash? Or will the markets trade sideways for a longer time? So stay tuned, because I'm gonna share my insights on where we might be headed next. Now, before we go any further, one quick thing for all you crypto traders out there. I often get asked about my favorite exchange to use, and the truth is, I don't have one. There are just too many hacks and downtimes to just rely on a single platform. Even major platforms like Coinbase have had major outages. That's why I use over 10 exchanges. And one of my main trading platforms is WEEX. They offer some of the lowest fees on trading, and getting started is as easy as signing up with an email. You can follow the link in the description to learn more. And if you want to get all the latest alpha in the crypto space and chat with the team that's tracking the markets daily, then check out the FireHustle VIP Discord. The link is also in the description below. And please remember, none of what I share is financial advice. This is meant to be for educational purposes only. Now hit those like and subscribe buttons, turn on post notifications, and let's dive right in. So we just went over how Bitcoin generally moves alongside the global supply of money. But if you look more closely at the data, you'll notice 2 major outliers. And one of these could be a predictor for when the next market peak and crash might happen. Let's start with the most obvious thing that stands out. Even though both the M2 line and Bitcoin's price line have been moving up together overall, the smaller fluctuations look a little different, especially in the current cycle. In 2022, when we hit the bear market bottom, global liquidity started outpacing Bitcoin's price movements. So the first move here for the M2 line lasted from November of 2022 into the start of 2023, before cooling off a bit. Bitcoin's price didn't react until 2 to 3 months later, and the peak of this climb was also hit a few months after M2 lost its momentum. It's almost like there was a delay before Bitcoin followed the rise rise of global liquidity. And there's also a lasting effect on Bitcoin from M2's momentum months before. Then both of these lines didn't see any significant positive action until the end of 2023. The M2 line climbed up to a new peak, cooled off, and then in March of 2024, Bitcoin also climbed to a new peak over 70K, about a 3-month delay between the peaks. Then again in mid-June, M2 started to climb to hit a peak in September of 2024. Bitcoin waited 3 months before starting a climb in September and hitting the next price peak in December. So there seems to be a consistent 2 to 3 month gap between M2 pushing higher and Bitcoin's price jumping to the next peak. And what about right now? Well, global liquidity is on a pretty strong uptrend as we speak. This began in January of this year, and again, 3 months later, Bitcoin bounced off the 80K and pushed back up above 100K. So if M2 is still going up, what does this mean for Bitcoin's price? Well, if this delayed pattern is consistent, as long as M2 keeps going up, this creates more time for Bitcoin to climb up. And once M2 peaks, then we could expect Bitcoin to continue climbing higher and reach its next peak 3 months later, which I'm sure we would all be happy to see. But this is where the second major outlier on this graph comes in. If you look at the previous bull cycles, each time Bitcoin saw its biggest climb to reach the cycle peak right before the crash, M2 was on a strong continuous uptrend. For the 2017 peak, M2 was on its most consistent uptrend that began a year before. For the 2021 peak, M2 was also on a pretty continuous uptrend from near the start of 2020. So both of these were clearly the most steep climbs for global liquidity in each cycle. Now, looking at the current cycle, there were a lot of fluctuations over the last few years, but the current climb is looking pretty steep. And it's lasted about 6 months so far, already beating the length of any other climb since the last crash. Almost resembles the start of what we saw in 2017 and 2020. So can we really be witnessing the early stages of the most aggressive climb this cycle? Well, if this is truly a repeating pattern, then I'd say it's pretty likely. Of course, we have to remember that this is the crypto space, and not everything works out perfectly the way we want it to. But what we can say is that Bitcoin's price action seems to ride on the momentum of global liquidity moving up. And based on how M2 is on a strong uptrend, a new all-time high for Bitcoin might be around the corner. Seeing Bitcoin fly to a new level is pretty exciting for anyone in crypto, but Bitcoin is just half the story. The other part of crypto that everyone is looking forward to is altcoin season. And here's where another debate comes up. Last year, we saw many altcoins go through a major climb, and we also saw a massive meme coin explosion, with Solana taking over as the hottest network to trade on at that one point. Celebrities were launching their own coins, people were making lots of money in a short amount of time. But there are also some major losses when some coin launches turned out to be pump and dumps. It truly felt like a bull run. All of this action hit a peak in January, and from there things calmed down. And this is interesting because this happened to be right after Trump took over as president. Bitcoin fell down 25% to cause fear and panic in the markets, and altcoins start to lose momentum. We all know that Bitcoin made a recovery to back over 100K, but altcoins are struggling to move back up. And this brings up a major question. Did we already see an altcoin season that peaked in January, or was this all a teaser before the actual altcoin bull run? Well, let's compare Bitcoin's price movements to the altcoin market using total 3, or the total market cap of all altcoins minus Bitcoin and Ethereum. Looking at just the last 3 years only, both the price of Bitcoin and total 3 have generally moved together in the same direction. A climb for Bitcoin lines up with the climb for altcoins, and downtrend periods are also in sync overall. Now, if we were to say that an altcoin season already happened this cycle, then this peak right here in December would be the ultimate peak for the cycle. And yes, this move from a bear market bottom of about $300 billion to over $1.1 trillion is a pretty significant climb. Almost a 4x gain for the entire altcoin market. But is this what an alt season is supposed to look like? Let's go back in time a bit and look at the last cycle. During the years leading up to the 2021 peak, there was the same synchronized movement between Bitcoin's price and total 3 for the most part. But there was a point when this changed. Near the end of 2020, Bitcoin went through a climb from 10K to 16K, gaining 60% over 3 months. At the same time, total 3 also went up, but only by 10%. After this point, point, Bitcoin continued on with a strong bullish climb towards the cycle peak. The altcoin market eventually caught up and gained momentum. Now look at this. In December of 2020, Bitcoin was at about 30K. This was a record high at the time. At this point, the altcoin market cap was sitting at about $130 billion. If you follow both of these lines from here all the way to when Bitcoin hits its peak for the cycle, there's a pretty big difference. Bitcoin's market cap doubled during this time, but the total altcoin market cap went through an 8x gain to reach over $1 trillion. If you think about what an altcoin season should look like, this is something that probably comes to mind. And the main difference between all the other fluctuations and this massive push up was Bitcoin's price line separating from the movement of total 3. After a 3-month delay, altcoins caught up and surpassed the movement of Bitcoin. Another thing to note is that as soon as the altcoin market caught up to Bitcoin's move up, Bitcoin dominance started to fall rapidly, and this should make sense. Liquidity started rotating into altcoins and supercharged the movement of total 3, which outperformed Bitcoin during the steepest part of the climb. Now, this reversal for Bitcoin dominance happened in December of 2020. And if you compare this to Bitcoin's price, it took about a year from this point to reach the top of the cycle. You can think of this as a year-long altcoin season. What's interesting is that if you go back to the 2017 crypto cycle, it was a very similar pattern. Bitcoin dominance started to drop in February and the market peaked in December, just under a year later. Going back to what's happening right now, Bitcoin dominance hasn't flipped yet. Based on the 2017 and 2021 cycles, when this metric flips, it could take a full year after the turning point to reach the top, which would extend the bull run beyond 2025, going against the whole idea of a 4-year cycle. Of course, a lot of this depends on if the pattern we've seen so far is actually going to repeat. We have to keep in mind that a lot is different with crypto this time around. There were so many changes made to regulations around digital assets, and this opened up the doors to spot ETF applications for a list of crypto assets, something never seen before. Even though Bitcoin and Ethereum are the only ones with approved ETFs so far, the fact that applications were even accepted for all these other assets is a massive deal. Think about it. The traditional stock market has a total market cap of over $120 trillion. The S&P 500 index alone accounts for over $40 trillion. Right now, the total crypto market cap is sitting at just over $3 trillion. So what happens when traditional investors currently positioned in the stock market gain more exposure to crypto assets through spot crypto ETFs? Well, there's so much potential here. Knowing how much has changed about the crypto space, I wouldn't be surprised if this cycle plays out differently from past cycles. Either way, I'll be keeping my eyes on the charts to identify any sudden changes that could indicate a shift. Until then, I'm still going to continue positioning myself to take advantage of an upcoming altcoin bull run. But I want to hear it from you guys. What do you think? Did we already see an altcoin season? Or are you still waiting for an altcoin bull run? Leave a comment below with your predictions. And one more thing, none of what I talk about is financial advice. Please make sure to always do your own research and understand what you're getting into before making any investment decisions. That way, you're well informed of the opportunities and risks. If you're interested in learning more about my insights on the crypto market and projects I'm looking at, then come and join me in the FireHustle Discord. You can find the link in the description below. And if you want more videos like this, then please hit that like button and subscribe to the channel. Hope you guys enjoyed the video, and I'll see you in the next one.